after paying taxes. $157 million this quarter. Very, very nice. And more importantly, the earnings per share, the best we've seen again in over 2 years. And now when we look at the balance sheets, the same thing. Assets here, $4.7 billion worth of cash, $2 billion in investments, pretty much cash and short term, $6.7 billion in liquid assets. That's a lot of money. They could be very strategic with that. I would think that's a very strong point to be standing for, especially for the institutional investors, which we'll get to in a moment. Now, when we look down to the liabilities, what I really like is the long-term debt. We don't have to focus on any of that. We see they cleared that out pretty much a year and a half ago. So that's awesome. Okay. And I do believe that the institutional holders like Vanguard and BlackRock and all of the big boys, State Street, Geode, they're all seeing the same thing here. They've been buying the stock. I believe it makes sense after it's being held down for over 2 years plus. Now, before we get into the charts, let me know in the comments section below if you're someone that has an account at Robinhood. Do you still trust them after what happened when they shut down the retail stocks? That ruined their reputation in my eyes. Like I mentioned in the beginning of the video, I will not be a customer personally, but it's not going to hinder, my thought process here, get in the way of me taking advantage of a trade opportunity. Okay, we could have our emotions and our sentiment, but we're not going to bring it into the trade. I just want to hear your opinions on it. Now, when we look at the technicals on the weekly, we had a really big overreaction, a huge pop here, pretty much to like 20 bucks, came all the way down, closed not only low of day, but low of the week. This interpretation here, extremely bearish, right? The volume spike is tremendous. The highest volume we've seen going back to February, pretty much a 2-month high volume on the weekly here, obviously to the sell side. Not a good reaction, a little surprising to me personally. I think it could just be all of the above, just that retail presence, jumping on it, the hype, the sentiment, it's going to break out, everyone buying calls, and then it just crushes the IV on them. That's very possible. I don't know exactly why this happened. If you have any idea why this overreaction here to this amazing report, let me know in the section below. But what I would like to see is two things here. Either we pull back and retrace to the 50% FIB retracement at $15.53, or we have a true support and resistance flip-flop, which would be coming down to that 1350 range. Now, when we look at this cluster here, this was the end of 21, beginning of 22 here. We have not traded above 1350. It got pushed down, it tried, it got rejected, tried again, rejected, a third time, rejected, and pretty much all throughout 22, 23, and the beginning of this year failed $13.50. Okay, and then again, give or take, 25 cents. It could be high 13s, mid 13 range. Okay, it's not an exact penny level. But what I would like to see is either we come down here, we test to that weekly 21, that 50% retracement and bounce, making another higher low, or we come down, like I said, and we have a true flip-flop, or like we said, a support and resistance flip. That would be amazing. Come down and retest that previous 2-year or 2.5-year resistance, and then come and have a huge rocket back to mid 20s, possibly even $30 if this thing really has the juice. But for me, the reason why I like it is it's very similar to all the biotechs. We're seeing the main institutional presence, smart money accumulating. This is very tight. Range bound or horizontal trading took that big burst, that explosion, finally the breakout where it soaked all this liquidity up, and now it has to come back down, retest, reinforce, and show that the bulls are going to again support the stock, stabilize it before taking the next leg. Before we wrap the video up, I want to talk about the options chain, giving you the official call out. I like the $20 calls for September of 2024. They are $1.10 by $1.15. Really solid open interest here, good volume, not that far away from the money. I would say near the money, not at the money. I think it's a really good value overall for the 20s. I know guys, they love the cheapies, they love the 25s, the 30s. That's very possible, but just know it's way riskier in my opinion. Okay, especially when the stock, let's say it has, a dollar to $3 range to come down. Now you're buying, let's say it opened on Monday and it still has more to retrace. These are going to get crushed way quicker. So just be cautious of that. If you're going to buy out of the money strikes, really deep out of the money, make sure you know that you've hit a bottom, that you're going to have some good directional change and consistency to that uptrend, let's say for at least a few days, right? You don't really want it to be choppy. It's up, it's down, it's having a red day, and then you're buying ones that are 10, 15 points out of the money. They're going to start to burn much quicker. Okay, so just be cautious of that. But if you're someone that trades options, if you like this setup here, let me know your opinions in the section below. If you have a different opinion than me, if you're someone that would completely stay away, do not touch the stock, let me know why you feel that way. Besides that, I like to keep it short and simple. I believe we're ready to take the next leg up. Once it gets on the north side of $20.15, that's ideally where we want to close above. But it's no shock to me that right at that 1950 level is going to be a huge target to get on the north side. Besides that, we have the 200-day EMA at 1839. We'll keep that there as a reference. We also, again, have the weekly 21, which I find is very possible we can come back and retest this. So I'll put another line here. We'll make sure that we label it accordingly and just make sure that we have a good plan to understand where it could pull back to, knowing that it still has more downside range. Like I mentioned, I'm not claiming to call the bottom here. I'm saying that we definitely have, 5 to let's call it 5 to 20% more downside. I know that's a big range. You might be saying, really, 20%? But it is possible after 2 years of not being able to break this level for it to come back, retest it, and take the next leg is actually very healthy. So let me know in the section below if you enjoy the types of videos where we focus on one stock, one specific ticker, and give you a quick breakdown. I like these styles of videos, short, simple, to the point. We don't have to overcomplicate with all these crazy levels and ranges and things like that. But ideally, where we want to retrace to 1550, right to that 21, also to be super healthy 1350. And then the north side, we really, really want to see this thing crack 1950 on the upside, close above $20.15, and then really get that big break on the north side of $21. Okay, thank you guys so much for watching. Have a fantastic day. And as always, we'll see you in the next one.